Mulch with the Ways and Means Committee. Nice to have you, Mike. Thank you for participating. Here they go.
Testing 1, 2. Well, we're going to bring the subcommittee to order. We've got two guys in here, the two most important ones in the whole Congress. Let me say our thoughts are with the Health Subcommittee Chairman Wally Herger as he continues to recover in California from a hip replacement surgery and a recent bout with the flu. And I speak with for all of us when I say we wish him well and hope for a speedy recovery. We're here today to discuss implementation of Obama healthcare insurance exchanges and related provisions. And I want to thank our witnesses for your flexibility so we'll be able to hold a hearing today. And thank you for sticking around. I appreciate it. In the interest of time and to accommodate our witnesses, I ask unanimous consent that my opening statement be made part of the record. You agree to that?
Absolutely.
And Mr. Stark isn't here yet, so without objection, I would ask that you make his opening remarks part of the record as well.
Absolutely.
Thank you. Appreciate that. Today, we are joined by 5 witnesses, and given the home state ties, I'll yield to the gentleman from Pennsylvania. If he's here, Gerlach, he's not here.
We're here.
Ah, you made it. Okay.
Amen.
To introduce our first witness, go ahead.
Thank you, Chairman Johnson, for giving me the opportunity to introduce my fellow Pennsylvanian Insurance Commissioner, Michael Considine. Last year, Michael was appointed by Governor Tom Corbett to serve as our Insurance Commissioner for the Pennsylvania Insurance Department and was confirmed by the Pennsylvania Senate back in April of last year. The Insurance Department of Pennsylvania administers the laws of the Commonwealth as they pertain to the regulation of the insurance industry in order to protect insurance consumers. Given that Pennsylvania is the 5th largest insurance market in the United States and the 14th largest insurance market in the world, Michael certainly has his work cut out for him when you add it to the implementation of the state exchanges under the Affordable Care Act. Throughout his legal career, he has concentrated his practice on regulatory and corporate matters involving insurance entities and consumers. From 1995 to 1999, he served as department counsel for the Pennsylvania Insurance Department, where he represented the department in an array of litigation proceedings and on transactional filings, including major corporate restructurings. He's also practiced law with the firm of Saul Ewing in Philadelphia, where he's a partner and vice chair of its insurance practice group. He's a graduate of James Madison University, as well as the Wider University School of Law, and given his vast experience and knowledge in the industry, he's an important asset to our Commonwealth. So we want to welcome him to the panel today and thank him for testifying on this important matter. Yield back. Thank you, Mr. Chairman.
Thank you. Also testifying today are Neil Troutwine, Vice President of Employee Benefits Policy Council at the National Retail Federation. Thank you for being here. Dan Durham, Executive Vice President of Policy and Regulatory Affairs at America's Health Insurance Plans. Jim Blumstein, Professor of Constitutional Law and Health Law and Policy at Vanderbilt Law School, Director of Vanderbilt's Health Policy Center, and Heather Howard, Director of State Health Reform Assistance Network and lecturer in Public Affairs at Princeton University's Woodrow Wilson School of Public and International Affairs. Thank you all for being here. You will each have 5 minutes to present your oral testimony, and your entire written statement will be made part of the record. Without further ado, Commissioner Considine, you are welcome to begin.
Thank you very much, Mr. Chairman. Thank you for that introduction, Representative Gerlach. Good afternoon, distinguished members of this committee. My name is Michael Considine, and I am Pennsylvania's Insurance Commissioner. As some of you may know, I had the privilege of presenting testimony in front of your colleagues on the Committee on Energy and Commerce in March of last year about our experiences in Pennsylvania with the first year of the implementation of the Affordable Care Act. In that testimony, I described Pennsylvania's early experiences with the ACA as traversing a path that was marked by a lack of clear direction and troubling indications of the terrain ahead. Unfortunately, in the 18 months that have followed, very little has changed. We still lack clear direction, and the flexibility promised us has not materialized, something that at this point poses a significant barrier to our ability to make informed decisions on issues that could impact the lives of millions of Pennsylvanians. To date, the Department of Health and Human Services has failed to issue numerous regulations regarding how states are to implement the ACA. Most of these outstanding regulations address critical issues on the operation and requirements of key components of the ACA, like health insurance exchanges. The lack of detailed information from HHS has put Pennsylvania and many other states in a very difficult position. We are traveling down a road directionless while knowing the road will soon end. Pennsylvania, like many states, need final rules and guidance on exchanges in order for us to determine what course is in the best interest for our state. These concerns and the absence of clear guidance prompted me to write a letter to Secretary Sebelius 2 weeks ago outlining 26 specific questions that we in Pennsylvania felt needed to be answered in order for us to make an informed decision on exchanges. I have submitted a copy of that letter to the committee for inclusion in the record. As of the date of this testimony, HHS has not responded to our letter. Pennsylvania is not an outlier in feeling directionless on this road. Recently, I was asked to chair a National Association of Insurance Commissioners working group charged in part with collectively identifying the universe of unanswered questions and issues with exchanges in order to help other states begin to better understand the impact the operation of a federal exchange may have on their insurance markets. We have yet to hold our first meeting, but already 22 states have signed up to participate in this working group. A poorly executed federal exchange launch and transition from current market rules to the new ACA rules could result in severe market disruptions and a weakening of states' control over their insurance markets. Continuing without answers to these crucial issues is like driving down a winding road at night without headlights. Nothing good will come of it. As chair of this working group, my hope is that we may provide the needed direction, guidance, and support for all states that are traveling on this road together so that we as regulators can help our states make informed decisions and minimize disruptions to insurance consumers and our markets. We sincerely appreciate the efforts of Congress in aiding us at this critical juncture. The road to exchange implementation is also a toll road. No matter what exit a state takes, it will cost something. However, without answers to our questions, the total costs are unknown but seemingly grow every day. States are also being asked to make a selection of essential health benefits benchmark plan by the end of this month, but no rule, proposed or final, has been released outlining the details of this process. Will a state selection really be the selection, or can HHS modify a state's choice, or worse yet, override selection and replace it with another benchmark? At this point, no state can answer those questions because there is no regulation. All we know is that the ACA clearly intended for the decision on essential health benefits to be made by the Secretary of Health and Human Services. So at this point, any inference that states have binding decision-making authority on issues appears to be an illusion. HHS has been similarly silent on how it intends to pay for a state exchange or what costs states should expect to incur, whether entering into a partnership or merely interfacing with a federal exchange. States are required to live within their fiscal means, which requires thoughtful budget planning. Without answers to these questions, it's impossible for states like Pennsylvania to adequately prepare. These questions are just a few of the many outstanding issues to which states like Pennsylvania need answers if we are made to make informed decisions. In the end, the unfortunate but consistent delay of information from HHS will hurt Pennsylvania individuals and businesses the most. They are the passengers in this journey that is supposed to bring them to a destination of affordable and accessible health care. A poorly implemented federal exchange, however, will put those passengers at risk. 2 years after the ACA's implementation, we see health care premiums in Pennsylvania continuing to rise, with no promise of reductions in sight, and we see an increase in the bureaucracy surrounding health insurance regulation. As I told Secretary Sebelius in my letter, Pennsylvania's focus remains on getting health care reform done right, not just done quickly, and certainly not done in a manner that puts Pennsylvanians at risk. Even though the lack of information from Washington is producing roadblocks to effective exchange implementation in many states, it will not stop Pennsylvania from continuing its own work towards achieving meaningful and sustainable health care solutions in our state. Thank you very much for the opportunity to testify before you today.
Thank you. Did you get an answer from the Secretary?
We did not.
Thank you. Mr. Troutwine, you are now recognized for 5 minutes, sir.
Thank you, Mr. Chairman, Ranking Member Stark, and members of the committee. I appreciate the opportunity to appear before you today. My name is Neil Troutwine, and I'm a Vice President and Employee Benefits Policy Counsel with the National Retail Federation. I'm pleased to appear here today on behalf of the NRF, which is the worldwide voice of retail in all channels and all forms of distribution. Retail supports 1 out of every 4 jobs in the economy today and contributes $2.5 trillion to the gross national product. We support effective implementation of the Affordable Care Act, even though we don't support the underlying law. We're concerned, as people who have to live with the law, by the delays in issuing regulations and agency reliance on temporary guidance rather than formal regulations. But we do recognize that the agencies are balancing a lot of different concerns, and probably we wouldn't have been happy had they issued interim final regulations in the first place. Still, we cannot afford to have the ACA stumble out of the starting gate, because it's our employees and individuals out there who bear the brunt of the problems. Particularly as regards health insurance exchanges, which is very important to employers and employees alike. The fate of exchanges will be a significant indicator for the ultimate success or failure of the Affordable Care Act. Unanswered questions abound on exchanges despite a final exchange rule. The lack of additional guidance on questions we and others have asked have not only slowed exchange planning in many of the states, but also employer planning for benefits in years 2014 and beyond. NRF and other members of the Coalition on Choice and Competition have worked hard to encourage both the states and implementing agencies to move forward, but the clock is ticking and fall 2013 is very short away. We particularly fear that as the regulations are released late in the ballgame, a cascade of regulations will telescope onto employers and really frustrate them as they're trying to manage new responsibilities. To employers, genuine reform would lower the cost of coverage and make it easier to provide coverage. The ACA is nothing if not complicated, something that advocates and opponents both agree. We do credit the regulatory agencies for working hard and fairly cooperatively to implement the ACA, which has not been the easiest task in the world. The administration has been appropriately solicitous of the retail industry, partly because of our place in the economy, also because of the difficulty of covering the retail and restaurant workforce. Much of the regulatory guidance released to date will help accommodate our workforce concerns, but we really would prefer not to have to revisit these issues on a year-by-year basis. Much of the administration's guidance lacks the notice and comment finality employers must rely upon to plan for the future. The consistent attention and cooperation of the administration, though it's been both welcome and helpful, doesn't make up for that finality. Timing is becoming critical for benefits that are to be available in January 2014. My members tell us that they commonly need 6 to 9 months to prepare for each year for coverage in an ordinary benefit year. 2014 will be anything but normal. It'll be a lot of new issues and responsibilities to take on. Without final regulations in the first quarter of 2013, I fear that we'll have a lot of attrition in the level of employer-sponsored plans. Again, I appreciate the opportunity to appear before you today. Fair and final regulations will help individuals, employers, health plans, and exchanges prepare for the difficult transition ahead in January 2014. The best chance health insurance exchanges have to succeed is to launch smoothly and as glitch-free as possible. NRF stands ready to work with the administration and Congress to help make the ACA more workable, so long as it remains the law of the land. Thank you, and I'll look forward to your questions.
Thank you, sir. Mr. Blumstein, you are now recognized. Well, wait a minute. Durham, let me get you first.
Thank you, Mr. Chairman.
Yeah.
Good afternoon. I'm Dan Durham, Executive Vice
Thank you.
President for Policy and Regulatory Affairs at America's Health Insurance Plans. I appreciate this opportunity to testify on health insurance exchanges. AHIP members are strongly committed to competing in the new marketplace and offering high-quality, affordable coverage to consumers who shop in exchanges. Since the day the Affordable Care Act was enacted, our members have been working around the clock to implement the law while continuing to meet the needs of their 200 million customers. Health plans are complying with the thousands of pages of regulations, data requests, and other requirements that federal agencies have issued. In short, health plans are focused like a laser on implementation while continuing to offer high-quality, affordable coverage within the parameters of the law. Our written testimony focuses on key implementation issues and recommends 5 things: minimizing disruptions as we transition to exchanges, ensuring workable exchange operations and state flexibility, minimizing coordination to prevent redundant regulations and data collections, maximizing choice and competition, and addressing specific ACA provisions to make healthcare coverage more affordable. I'll begin by emphasizing the urgent need for regulatory clarity with respect to exchanges. Health plans, states, and others need clear regulatory guidance on the following. First, the comprehensive insurance market reforms, including guaranteed issue, adjusted community rating, and geographic rating areas. Health plans need clear guidance on how these new market rules will be applied both inside and outside the exchange to appropriately develop and price their products. Second, essential health benefits. While we appreciate the flexibility provided in the bulletin released last December, health plans need final guidance on essential health benefit requirements to develop products that qualify for individual and small group coverage. The process for developing new products is data-intensive and time-consuming and typically takes between 12 and 18 months. Third, cost-sharing reductions. While the bulletin released last February was very helpful, health plans still need clear guidance on how to develop additional products on the silver tier that will meet the cost-sharing reduction requirements. Fourth, actuarial value. While the bulletin was released last February, and we know a great deal of work has been proceeding, we look forward to the release of the actual calculator that will provide a simplified means for health plans to compute and report actuarial value for the plans they intend to offer. Fifth, risk mitigation programs. While the final rule was released earlier this year and significant work is ongoing, the specific parameters for reinsurance and the methodology for risk adjustment have yet to be released. Health plans will need to know the details. And sixth, the certification standards for qualified health plans, including quality reporting requirements on the activities that improve health outcomes and patient safety. Health plans need to know all the requirements necessary to be certified as a qualified health plan in order to develop their products appropriately. Clear regulatory guidance in each of these areas is needed in the very near future. Unless such guidance is forthcoming, it will be difficult for health plans to complete product development, fulfill network adequacy requirements, obtain necessary state approvals, and ensure that their operations, materials, training, and customer service teams are fully prepared for the initial enrollment period that begins on October 1st, 2013. Our testimony also outlines specific recommendations for ensuring that exchanges work efficiently and effectively by minimizing duplication of regulations, data collections, and exchange functions, and adopting common standards for the flow of data between exchanges and health plans. And finally, while the ACA expands coverage to millions of Americans and provides subsidies, several provisions of the law will have the unintended consequence of making coverage less affordable. Our written testimony examines 3 such provisions. First, the health insurance premium tax. Second, the minimum coverage requirements. And third, the age rating bans. We strongly urge Congress to revisit these issues to avoid higher costs and potential coverage disruptions for the American people. Thank you again for this opportunity to testify. I look forward to your questions.
Thank you, sir. Professor Blumstein, now you can talk.
Thank you, Mr. Chairman, Mr. Stark. My name is James Blumstein. I'm a professor at Vanderbilt Law School and Vanderbilt Medical School. I'm pleased to be invited to appear before the committee. I speak as an individual, however, not as a representative of Vanderbilt or any other institution. Briefly, I've been asked to address a very focused and very specific question. What is the scope of subsidy that's available on these new exchanges that are going to be created under the Affordable Care Act? Clearly, there are subsidies available under the statute for state-run exchanges. The question I want to focus on is whether those same subsidies exist or can exist under the law for federally run exchanges. Secondly, the IRS has issued a rule that extends coverage of the subsidy to federally run exchanges. Is this rule sustainable? The subsidies have two roles. They support those who have incomes at 100 to 400% of the federal poverty level, but they also serve to trigger an employer tax or penalty if an employer is obligated to provide, a large employer is obligated to provide coverage that is affordable and meets the federal standards. And the question is whether or not the IRS, through the rule, can impose the subsidy requirement, which in turn triggers this tax or penalty on employers. My brief conclusion is the following. The Affordable Care Act, or the ACA, does not provide for a subsidy on the federal exchanges, and the IRS exceeds its authority in promulgating this rule. So let me focus first on the provisions of the Affordable Care Act. The Affordable Care Act provides two types of exchanges: a state-run exchange under Section 1311 and a federally run exchange under Section 1321. Under federal constitutional principles, the federal government can induce states to establish exchanges, but they cannot force them or commandeer them to do that. So inducement is okay, coercion is not. The ACA provides different treatment for these two exchanges. There is a subsidy expressly provided for state-run exchanges, and to make clear there's no ambiguity, under Section 1311. That's the section that provides for state-run exchanges. There's an important canon of construction in written documents, contracts, statutes, called, excuse my Latin here, but expressio unius est exclusio ulterius, which means the expression of one thing is the exclusion of another of the same kind. So there are two, very straightforwardly, there are two types of exchanges under the ACA, state-run and federally run. The subsidy provided for in the ACA provides only a subsidy for the state-run exchange. So under the exclusio unius principle, granting subsidy on one exchange and omitting that subsidy on the federal exchange means that there's no grant of comparable subsidy on the federal exchange. And so if the issue were only under the statute, it would be pretty straightforward and it would be relatively easy to interpret. What about the IRS rule? The IRS expands the scope of coverage so that subsidies exist on both the state-run and the federally run exchange. There's no question the IRS has rulemaking power to establish the rules of the road on how these exchanges will be implemented. The question is whether they have, narrowly speaking, power to extend the subsidy to these federal exchanges and thereby impose a tax on large employers. Federal agencies have gap-filling authority when an issue is either expressly delegated to it or when, because of ambiguity, the issue is implicitly delegated that power to fill a gap. But the agency gap-filling power, because of ambiguity, must relate to the specific issue the agency addresses in its rulemaking, not globally, but specifically. Here, that question is the scope of the subsidy. In determining whether ambiguity exists, the courts have said that you look at traditional tools of statutory construction, for example, the expressio unius rule. And under the expressio unius rule, there is no ambiguity on the question of the scope of subsidy. Only state-run exchanges are qualify for that subsidy. The ACA provides for subsidy on only one of the exchanges, the state-run exchanges. It makes reference to the statutory Section 1311 to make sure that there's no ambiguity. So it mentions state-run exchanges and it mentions Section 1311. Absent ambiguity, the IRS's power to expand the subsidy vanishes. There is no gap to fill, and thus no power for the IRS to act as it did. Thank you, Mr. Chairman.
Thank you, sir. Ms. Howard.
Thank you. Thank you,
You're
Chairman.
recognized.
Thank you, Chairman Johnson, Ranking Member Stark, members of the committee. My name is Heather Howard. I direct the State Health Reform Assistance Network, or State Network. It's a program of the Robert Wood Johnson Foundation that is helping states implement the coverage provisions of the Affordable Care Act. The program is housed at Princeton University's Woodrow Wilson School, where I'm a lecturer in public affairs teaching about health policy. And before coming to Princeton, I was New Jersey's Commissioner of Health and Senior Services. My testimony today calls on my experience working with states on exchange implementation and my previous service as a state health official. My comments are my own and not on behalf of Princeton University or the Robert Wood Johnson Foundation. From my experience, I can tell you that while hurdles remain to be overcome, many states are actively implementing and are on schedule to stand up health insurance exchanges that will provide a competitive marketplace for individuals and small businesses to shop for affordable coverage just over a year from now. Today, I want to talk about a couple of the themes that we are seeing in state implementation of health reform. First, we are seeing that states that want to move ahead with reform are effectively implementing exchanges. Second, those states that have not yet made significant progress have a path forward through the partnership or federally facilitated exchange. Third, we're seeing that the federal-state relationship has been marked by flexibility and collaboration. And finally, we're seeing that states are using that flexibility to innovate and tailor their solutions to meet their state's needs. Let me start first with what we're seeing in the states that are successfully getting ready to implement the Affordable Care Act. We know that 49 states and D.C. have received federal planning grants. 35 states received establishment grants to facilitate additional planning and implementation. 13 states plus D.C. have already submitted letters to HHS affirming their intent to establish a state-based exchange, and 15 states already have exchange structures in place. Now, that's 13 states and the District of Columbia that have already signaled their intent to establish a state-based exchange. We know that other states, though, are working diligently but may need to use the partnership model to bridge the gap to when they can actually stand up a state-based exchange. This partnership model allows states to retain plan management and consumer assistance functions. Those are two areas where states have traditional expertise and regulatory authority. And we know that still other states have done little beyond basic research in preparing for an exchange, but many of them are studying the issues and preserving their options. And we know that the ACA clearly envisioned that not all states would stand up a state-based exchange, so the federally facilitated exchange will provide consumers access to affordable health insurance products in those states. Now, we've heard today that the reason for state inactivity is a lack of guidance from HHS. But if a lack of guidance were a real barrier to progress, one would expect that the leading states would be confronting the most barriers and complaining the most loudly about the need for additional rules and regulations. In reality, the opposite is true. Those states, those leading states, are seizing the flexibility afforded them to pursue innovative approaches. And I believe, indeed, that the primary factor contributing to this variation in state activity is the political climate in the states. Now, we're also seeing that federal officials are taking a flexible and collaborative approach to ACA implementation. In my experience, they have provided enough guidance, responsiveness, and flexibility to enable the states to be successful. Indeed, we're seeing time and again that they have come down on the side of state flexibility, and something that as a former state official I know and appreciate. The best example of this is the guidance establishing the exchange blueprint, which CISIO has offered to the states. It's a step-by-step outline of what states will need to accomplish in order to comply with the ACA. And HHS has set up a series of collaborative meetings, what they call establishment reviews, to go over state progress and address state concerns. Another example that is in my testimony that I can refer you to of this state flexibility is the essential health benefit process, where CISIO has indicated that states can choose their own benchmark based on plans in their own state. Now, are more formal rules on EHB and other difficult topics still needed? Absolutely. But do implementation efforts need to come to a halt in the absence of formal rules on every open issue? State network states and other states across the country are proving that is not the case. Now, finally, we're seeing that states are using the ACA resources to address longstanding problems and persistent needs. While ACA implementation has presented an enormous challenge to states, we know they are dealing with, of course, budget constraints, staffing constraints, but at the same time, I've talked to many state officials who are seizing the historic opportunity to expand health insurance coverage and are tailoring their implementation efforts to meet their state's unique needs. And I offer many examples of this in my written testimony. So in conclusion, the range of tasks that lie before states and the federal government are both daunting and exciting in scope. Nevertheless, states that haven't made substantial progress have a path forward under the partnership or federally facilitated exchange models, and states that want to implement reform have and will continue to make great strides in developing and implementing exchanges. Thank you.
Thank you, ma'am. Commissioner Considine, you know, you said you had never gotten a response out of the
That's correct, Mr. Chairman.
Secretary. And our concern is that HHS has been slow to provide states with the necessary information on a number of key issues. In reviewing your letter, your requests seem very reasonable, like asking for a detailed timeline on when the 100 future or forthcoming exchange-related regulations cited by HHS will be released, and if HHS will be issuing final regulations to their numerous interim final rules. When HHS will release its rule governing federally facilitated exchanges, and when will they release a mandated benefit package rule? And you've never received an answer, is that true?
Not today, Mr. Chairman, no.
And you asked all those questions?
We did indeed.
Well, let me get this straight. States are supposed to make decisions on benefit packages in the exchange by the end of the month. Is that true?
That is generally true at this point.
Yet HHS hasn't released so much as a proposed regulation outlining the details of this process.
We have guidance at this point.
And what kind of guidance? Is it detailed?
It is detailed in some ways, lacking in others.
And states are supposed to let HHS know by November 16th, that's not that far off, whether or not they intend to create their own exchange, despite the fact that there are nearly 100 forthcoming exchange-related regulations, and HHS has yet to propose regulations on what a federally facilitated exchange might look like. Is that correct?
That is correct.
It's baffling that the Obama administration can expect state governments to make informed decisions, ones that could require tens of millions of dollars in additional costs in the face of such regulatory uncertainty. Perhaps I shouldn't be surprised, however. By withholding information critical from stakeholders, stakeholders are paralyzed and the Obama administration holds all the power. By keeping information from states, employers, and health plans, the federal government's takeover of our health care system will be complete. As a defender of states' rights, that frightens me. I thank you for your testimony, all of you, and Mr. Stark, I recognize you for 5 minutes.
Thank you, Mr. Chairman. Thank the witnesses for enlightening us today. I'm concerned, Mr. Considine, that you're having trouble getting in touch. You wrote to Secretary Sebelius in August, the end of August, with a bunch of questions regarding exchanges, and have you had any meetings with them?
Not since we've sent the letter, no, Representative.
You know, have you asked for any meetings?
We have fairly regular discussions with HHS, but not in response to our questions now. We've not asked for a meeting at this point.
I see. Well, if you contact Mr. Diagardi, the Health and Human Services External Affairs, he'll set up a meeting. If you didn't have to catch a 4 o'clock train, I'd set up the meeting for you this afternoon. And I'm sure that they could help you far better than any of us could. And, you know, they'd welcome the chance. So I hope that you'll take advantage of that and sometimes not wait for a letter. I mean, wait for a call back. We learn in this business is to wait a long time. Make the second call, will you, and see if they can't help you. I think that'd be I think they'd cooperate with you and get you all the information. You may not make it any easier, don't misunderstand me, but I think that they could probably answer a lot of questions for you. I'm concerned, all of you, I can recall some time ago, had to implement supplemental insurance rules, right? Your state has, Stroutwide, Durham, Ms. Howard. I mean, and there was some grumping and complaining by the insurance companies and others, but now it seems to work pretty well. Seniors like it. They can all look at the same policies, different in each state, but they get a selection of, what, 10 or 11 policies, varying from very limited benefits to generous benefits, and the prices are all there. And it's wonderful for the consumers. And I shouldn't think that the insurance companies then, it would seem to me, and their brokers or salespeople, are selling the same benefits at different prices, and they have to pitch the fact that they can provide good service. And that's, you know, it's hard to spell out what's good service, but people can check with references, or if it's a company, people dealing with group policies can find out from their other companies how well Aetna does against Blue Cross. And I think that it serves us so well, it serves your constituents or state so well, to have some kind of a determined outline so that people, that we make it easier, not easy, but easier to compare. And most of us are not experts in insurance, as you all are, and you're dealing with people who, they can get the broad idea, but if they can see a list, that's really, I think, what we're talking about, I think you do a real service to your constituents. I would say that it's too bad we don't have anybody from California, but we're going to be ready on time. The governor, our great Republican governor, is ready to roll up his sleeves. He signed the implementing legislation in September. And I'd hope that other state governors would move ahead. Sometimes we just have to dig in and say, this is a pain in the butt, like a new tax regulation or a new whatever. You've got to go ahead and do it. And I don't mean to say that we just put those things in law to make trouble for you, but we try and put them in law so that we have to write laws here for every state in the union. We can't write one law for California and one. And so thank you for putting up with us. And please call on our staff. I know the Republican staff is willing to help, and see if we can't cooperate and get this done for all of our constituents. Because in the end, to bring in millions of additional people is going to save us all money. It's going to save the taxpayers money. It's going to lower in time the costs of medical care. The worst thing we could have is somebody without medical insurance or a way to pay for medical care ending up in the emergency room. That costs all of us. It raises our insurance premiums, it raises our taxes, and that's the one thing I think we can all agree. We have to see that everybody gets covered one way or another. You may not like my universal health care plan, but let's work toward it. Thanks very much, Mr. Chairman. Thank the witnesses again.
Did the governor of California change parties?
No, he hasn't. Now, we've talked to him about that.
Well, you called him a Republican governor.
But then his wife would become a Republican, and then we'd have real trouble.
Well, you called him a Republican.
Oh, he is?
No.
Really?
Arnold?
Yeah. Arnold's not governor anymore, I don't think.
Well, no, but he signed it. It was Governor Schwarzenegger, I'm sorry.
Mr. Nunez,
Not
you're
Governor Brown.
recognized.
Thank you, Mr. Chairman. I just want to state for the record that in my district, I think from California, with Medicaid and Medicare going broke in the state of California and dire need of financial and budget reform, They actually can't even pay the bills now. Governor Brown, who's a Democrat, is going to the people to raise taxes, and they're not even sure if those taxes will pay for the current requirements under Medicaid, or what is known as Medi-Cal in California. Ms. Howard, in your testimony that federal officials have been responsive, I think you used the words flexible and collaborative. I'm troubled to understand how it's collaborative or responsive when bulletins and guidelines are being substituted for the normal procedures which involve drafting clear rules, allowing for public comment, and then setting formal policy.
Well, actually, it's more collaborative the way they've been doing it, because it allows them to meet with stakeholders, and I think we heard from some of the stakeholders here that they've been involved in that process and that they're able to inform the formal policymaking role. That in the first year of ACA implementation, they issued a number of interim final rules, and there was an outcry from the regulated community that, you know, we want to be more collaborative, and so now they've taken the less formal approach, and they've been meeting with stakeholders, and I've certainly seen that. I saw the commissioner at the National Association of Insurance Commissioners meeting in August, and there were a number of federal officials there holding office hours, meeting with state officials. So I think this process, and EHB, the Essential Health Benefits, is another example where the federal government has been flexible. They received input from an expert panel at IOM. They met with stakeholders. They developed initial guidance. Then they met with stakeholders again. They issued frequently asked questions. And in the end, they came down on giving states flexibility and said to states, you can choose a plan that operates in your state. We're not going to come up with a one-size-fits-all federal approach. So I think we really are seeing the federal government be as flexible as they can. And as a former state official, I know you want clarity from the federal government, but that's not always the best thing, because what we're seeing is states are seizing that flexibility to come up with solutions that work for themselves.
Well, that sounds nice, but in reality here, we passed legislation. I didn't vote for it. Many of us up here didn't vote for it. But at the end of the day, there has to be clarity for folks like the insurance commissioner to implement law in his or her own state. So, Commissioner, how are you finding the flexibility?
Representative, we hear the words flexibility, collaboration a lot. You know, what we often get, however, is we will be collaborative and flexible within a fixed sort of parameter of a mindset within HHS, but outside of that, you quickly run into resistance. You know, we have a very good working relationship with HHS. A number of those folks are former insurance regulators, and I have nothing but admiration for the job they're trying to do. But what we often get, what we're really after at this point is the guidance and the clarity that you talk about. And they're not, you know, in the weeds questions at this point. We're asking very general, broad questions like, how much is this going to cost us? What level of autonomy are we really going to have? How is this going to work? And we'll get back to you soon.
Well, it sounds like the flexibility you're going to need is you're going to have friends on the Ways and Means Committee to get you appointments with the people over at HHS who you can't get a response from. I just want to be kind of general here, just to get a general flavor for all of you on the panel, from just on a scale of 1 to 10, just to kind of give the general public your view of whether or not how successful this is going to be by 2014 in terms of its implementation. So 1 being it's going to be great, not going to be any problems, to 10 being it's going to be a complete train wreck and we got a lot of problems before 2014. Why don't we just start with you, Mr. Commissioner?
Thank you for putting me on the spot. I would give it.
Well, we can start on the other end if you like. But.
You know, I would give it an 8. I mean, we have very grave concerns at this point that people, if they don't have good information, they're going to make bad choices. And when you're making bad choices when it comes to health insurance, that has very significant repercussions.
Mr. Trotwine.
I worry that we're in that 7 to 8 range myself. I represent employers who are going to have to deal with the compliance issues and understand how to navigate through their responsibilities. I spent a lot of time trying to educate my members about how the law will come effect and what their responsibilities will be. There's a lot of confusion out there.
Thank you. Mr. Durham, and we only have I'm out of time here. The chairman's being very gracious, so.
It depends. The sooner we get clear regulatory guidance, the closer we can get to 10 on the scale.
You mean to 1 or 10?
Depends on receiving
Depends-
clear
depends on the
regulatory guidance. The sooner, the better.
Mr. Bloomstein?
Yeah, I don't know that I can give you a number. Of course, I'm from Tennessee, where we implemented our 10-care program in about 60 days, so our folks are pretty good in navigating that process. I'd have to say that it would be nice to get more clarity and have a rule of law. When you talk about negotiation, it's really not a rule of law, and that's the problem that I have with that process.
Good, great words. Ms. Howard?
And like the professor here, I'm a lawyer, not a math person, so I'll just say that I think the building blocks are in place. The federal government has experience with Part D, with HIPAA, with the early implementation of the under 26 and the pre-existing exclusion for kids, a lot of experience under its belt, and I'm hopeful it will be as close to that end of the spectrum.
So 3 heading to 1.
You know, I'm hopeful it'll get there. Millions of people are hoping for it.
Thank you. Thank you, Mr. Chairman.
Yeah, the gentleman's time's expired. Mr. Kine, you're recognized.
Well, thank you very much, Mr. Chairman. I want to thank the panelists for your testimony here today. Ms. Howard, let me start with you. Perhaps I missed the memo that went out somewhere that said this was going to be easy, that this was going to be seamless, that this was going to be perfect right out of the block. I think we all know, those of us who have been dealing with health care reform, how complicated and how difficult this is going to be to try to increase the access of health care coverage in our country, improve the quality of care, and bend that cost curve. This is probably the paramount issue that we're facing with as a nation today. We're not going to get our fiscal house in order unless a lot of these reforms succeed in being able to bring health care costs while expanding coverage and improving quality. I mean, it's as simple as that. And yet I hear a lot of people complaining that things aren't happening immediately and perfectly right out of the block. Mr. Considine, I appreciate your testimony, but I think you're here and you're a little more sophisticated and you're leading us to believe in the political world. You don't send a letter to a department like HHS and expect the immediate response within 2 weeks and then rush down to Washington complaining about lack of responsiveness. And I'll guarantee you pick up the phone, you call, and you set up a meeting down there. They'll be more than happy to sit down with you and go through this chapter and verse. And you're not going to need any leverage on this committee or any other member of Congress to help grease the skids to get an appointment with HHS. And Ms. Howard, I'm hearing from you that with the collaboration that you're working with the states willing to go forward on the exchange, that there has been some open communication, and yet we heard testimony today. There's a lack of communication, there's a lack of direction, there's need for clear guidance. Is this what you've been experiencing and working with the 10 states that are trying to implement the exchanges right now?
I'll start by saying I think you're right. If it were easy, we would have done it already, and it would have been done generations ago. And we have some good early news today with the census numbers. I'm seeing a drop in the uninsured rate, but there's a lot of work to be done. What we're seeing in our states is that the states that want to move are able to move, and in fact, they're seeing this flexibility as an opportunity. So I'll take, for example, I'm sorry the Congressman Blumenauer is not here right now, but Oregon is seizing the flexibility under the EHB rule. They've recommended the third most popular small group plan in their state to be their essential health benefits benchmark. So if there had been something from on high from the federal government saying this is what the benefits package would look like, Oregon wouldn't be able to do the analysis and see what works for Oregon. So certainly time and again we're seeing states are seizing this opportunity and are really able to do it in a way that works for them, and that's that federalism that I think we want to see, that collaboration between the federal government and the states.
Well, we just heard previously from Mr. Trautwein, and I appreciate his testimony, that by the first quarter of next year, we are going to need some clear direction. We are going to need clear rules at that point. Do you agree with that assessment?
I agree. I agree. It absolutely. And I think the federal government has been prioritizing what they've done. They've done a number of final rules this year. They did the exchange final rules. They actually did the final rules on risk adjustment, which was really important, very complicated, and that's something they tackled early, knowing that it was so complicated. So I think you're seeing a sequencing, and I think we will see more as soon as they are able.
Well, and I think, with all due respect to the chairman of this committee, this hearing may be a little premature in that regard. But as far as I'm concerned, I'm of the attitude that the more oversight, the more hearings, the more feedback we can get, the better off I think everyone is going to be. So I don't have a complaint having a hearing like this today, but let's also be realistic in regards to the timetable involved. And I guess what's frustrating for me is, the whole creation of the exchanges in the Affordable Care Act was based on legislation that I and others had introduced for years around here, called the SHOP Act. And every time I introduced that bill, I had an equal number of Republicans and Democrats supporting it because, what's conceptually not to like? It's giving consumers choice to be able to go to a health insurance exchange and be able to choose their own plan amongst competing private health insurance plans Through the power of the competition in the marketplace, that is going to help drive prices down and hopefully improve the quality of care. And then we couple it with tax credits to make it affordable for those who can't do it on their own, the low-income families. And that's really the whole concept behind the exchanges. And then, by the way, I mean, if states want to join together and form a larger exchange across border, they're allowed to do that too under the Affordable Care Act. There's no restriction for states to be able to partner and create even larger exchanges. If all 50 states want to eventually create one national exchange, there's nothing stopping them or prohibiting them from doing it. But I sense from your testimony, Ms. Howard, your opinion is that there is a difference in attitude and therefore approach from those states willing to make their best effort and go forward in the implementation of the exchange, and those that for whatever political reason are choosing not to. Is that a reasonable assumption?
I think that's correct. I think the variation in state approaches is due in large part to the political climate in the states. And the states that do want to move and are trying to are trying to implement, are finding ways to do so.
Well, I think this is a response to the 54 million uninsured and the fact that the small group market has failed miserably for so many individuals, small businesses, and family farmers. And if anyone has a better idea of how we can extend health care coverage on an affordable basis to more Americans, we're all ears. I mean, this is not all set in stone, and we're willing to make adjustments as we go along, too. Thank you for your testimony. I yield back.
Drink more milk. Mr. Reichert, you're recognized.
Thank you, Mr. Chairman. I want to quickly follow up Mr. Blumstein with some questioning as far as how you communicate with the government. I was a sheriff for a long time and had the opportunity to work closely with some of the federal law enforcement agencies, and know that sometimes communication by phone is an expedient way of getting things done, but sometimes you need things in writing. And I was just listening to your earlier testimony and your description of the two exchanges that exist, the federal and the state, but we have information here too that lists some other, maybe these are sub-exchanges under the two main exchanges: American Health Benefit Exchange, the Small Business Health Options Program, the regional or other interstate exchanges, the subsidiary exchanges, exchanges operated by HHS Secretary, and then there's a partnership exchange listed. And under that title, it says, via rulemaking, HHS has created and modified federally controlled partnerships, in quotes, exchanges which are not defined or contemplated anywhere in the law. So when we go to the question of how we communicate with the government, what would you rather see? Something in writing? You send a letter and get something back in writing so you know that the government has answered the question in a way that you can respond to? Or does a phone call, a personal meeting, what's your opinion on that?
Well, I think that the relationships between citizens and their government should, when possible, be based upon rules, and we live in a rule of law society, and I think it's important to specify those rules. Otherwise, one lives in a world of governmental discretion, and governmental discretion can be exercised in ways that are appropriate, and it can be exercised in ways that are questionable and inappropriate. And so I tend to err on the side of having clearly delineated structures and rules and guidelines, and to develop a process with some degree of transparency so that the accountability concern that citizens have is really adhered to. I've been in many negotiations, and what is negotiated can work for one situation, not for another. That sounds flexible, but it also runs the risk of bias, cronyism, using leverage in inappropriate ways. So I think that the better way to communicate is through formality. Now, that doesn't mean that there's not a role. I think that Mr. Stark's proposal to get together is not a bad proposal. I think that's a reasonable proposal. But at some point, at the end of the day, the proposal has to be written down, and it has to be neutrally administered so that the particular government official is going to say what the deal is, what the structure is, and you don't always have to go to the government. Please, Daddy or Mommy, can I do something at a certain time? There have to be claims of right, and that's what the rule of law is about.
Right, and if you have a piece of paper to look at, we all know what the rules are,
Exactly.
don't we? Sort of bothers me that this last partnership exchange is not mentioned anywhere in the law or in any rules. but it's still a part of a plan that maybe some of you may or may not know about as yet. I want to focus on the cost real quick in referencing our state of Washington, in particular with the Commissioner and Mr. Troutwine. The health care law requires exchanges to be self-sustaining by 2015, as you well know, and this means that the federal government cannot support ongoing exchange operations and administrative costs. Washington State's own exchange consultants have estimated that in 2015, the cost of operating the exchange will range from $40 to $60 million per year. So this runs between $11 and $22 per member per month. It runs about $500 to $1,000 plus per family of 4 per year. And this is on top of the premium for health insurance and just to pay for the administrative costs of operating the exchange. That's the cost. So many of the functions of a healthcare exchange are already provided in the private sector. For example, verifying eligibility, billing, those examples. Why is it costing taxpayers in the state of Washington $500 to over $1,000 per family per year to receive subsidies through this structure?
Congressman, I really don't have much in the way of insight as to Washington's state's cost. In our experience in looking at various exchange options in Pennsylvania, cost is really dependent on the design of the exchange you go with. Some states are looking, we're looking and are looking at designs where the state's involvement is very minimal and therefore costs are less. Some are looking at a very engaged state exchange with additional levels of bureaucracy, employees, and of course that adds to the tab. Certainly from our perspective, coming from a state that does have its fiscal challenges, being cognizant of the cost is a significant part of the analysis process we're going through, because at the end of the day, those costs will be borne by the taxpayer directly or indirectly. And again, this is coming at a time when health care costs, even with the passage of the Affordable Care Act, continue to go up. So to add to that further by adding additional costs caused by potentially moving forward with a state exchange is again part of the dynamic that we are all looking at in weighing our options at this point.
Appreciate it. I see my time has expired, Mr. Chairman. Thank you.
Thank you. Mr. Pascrell, you're recognized.
Mr. Chairman, the Exchange Grants Program has awarded over $1.6 billion to states and territories in pursuit of this effort to implement the legislation. My home state of New Jersey, and I'm glad we have a Jersey girl on the panel, my state of New Jersey has already received $8.6 million in grants for research, planning, information technology development to get the exchange off the ground. Yet, there is some political involvement here, which continues to get in the way, and it seems that certain governors and certain legislatures would rather reject input into something critically important for their own constituents just to make a point. Now, I'm convinced after listening to the distinguished panel, each and every one of you did a really fantastic job, that, number one, we're here discussing the bill and the act right now, and the particular exchanges that are going to come about in 2014, because the past system, or the system that we have now, didn't work. There is a lack of competition, and you've said it in different ways. There are some states where you had only 3 or 4 companies writing policies. And that is controlled by the individual insurance director or commissioner of that particular state. So it wasn't easy just to talk about. There's no easy answer to, why don't we just have people allowed to cross the state lines and go into Nova Scotia, which is not a state, and buy insurance? It wasn't that easy. How much competition do we have in most states? Very little. Is this what capitalism advocates? No. Don't we essentially desire to increase competition? Yes. Is the objective of the exchange system to increase options and competition? Is that what its purpose is?
And do we have really an enlargement of a federal system, whatever that is? The answer to the first question is yes, yes, and yes. And the answer to the last question is no. How this is an enlargement of the federal system, and remember in the beginning it was called socialism. Now we've gotten off that term, we're using other terms now. How, when we want to increase competition, when people are going into the private market, into these exchanges, regardless of how they're established in each state, does that reduce private entrepreneurship? That's a good question, I think. I've never heard a good answer to it. Now, Mr. Blumstein said that, rightfully so, that there are only subsidies for those state-run exchanges. I think that's what you said, Mr. Blumstein, correct? That's, if you read the legislation, I think it's pretty clear. So you omit subsidies. Subsidies are omitted for federal exchange. In other words, with the federal government, there comes an exchange. And I'd like to know, Ms. Howard, Director Howard, what do you think about that?
So, you know, we have, what's also clear is we have very clear guidance from the IRS on this issue. And the IRS actually testified yesterday before another subcommittee of this committee on this issue. And we have career attorneys at the Department of Treasury that have been looking at this and have come down, in all due respect to my colleague here, on the other side. And certainly what I'm seeing across the country is
What's the other side?
The other side is that the exchange, that regardless of the type of exchange, consumers should have access to subsidies.
But that isn't what he said.
Right.
Oh, okay. Let me ask you this question. In your testimony, you identified several different forms, state exchanges. The forms they're taking are very different. It seems that a rigid approach would not be the most effective way. I think we all agree with that. Can you discuss some of those different approaches that states are taking and address some of the unique state-level insurance market issues that might be beneficial to one state and not another?
Thank you. That's a great question, and I'll tie it back to your earlier point, which is that we do see variation across the country. In some states, they have one insurer may have 85% of the market, so you have incredible competitions. You have incredible concentration.
You wouldn't call that competition, would you?
Think,
would anybody on the panel call that competition? When one company is writing 75% of the policies in that state, is that competition?
Well, I'd just like to add here that you can go to healthcare.gov at any state and any zip code, and you can see all the plans that are available now in the individual and small group market. Our plans have made an awful lot of effort to load those systems with what they have to offer in those states. So there is a lot of choice out there.
Well, things have changed in the last 2 years. It's interesting that when we debated the bill, it precipitated many changes in many plans, in many offerings. So already, I think, before we get to the exchanges, we have health care reform to some degree. Yeah, but I interrupted you when you're finishing questions. If I may, have her finish.
One more.
Thank you. No, ask the question.
So, Congressman, you're right. There are many different kind of exchange options available to the states. There's the state-based exchange, in which a state runs all the functions of the exchange. At the other end of the spectrum is the federally facilitated exchange, in which the federal fallback. But there's this new model called the partnership model, which would allow the state to take on some of the functions of the exchange. And that model is attractive to some states that might not yet be ready to run their own exchange, might want to do only parts of it. And it really allows a state to maximize the areas in which they have expertise. A state like New Jersey that has a robust regulatory scheme, the Department of Banking and Insurance has a lot of expertise there. They might want to maintain plan management. They might choose to maintain control over their insurance market rather than having the federal government come in and do it. So that's that partnership model, which is really a flexibility for the states.
Mr. Chairman, in conclusion, if I may, if we heard complaints about certain states having a problem getting to the goal line, 1/3 of the population of this country right now are living in states that have a darn good exchange plan moving. 1/3 of the population already.
Okay.
Thank you.
The gentleman's time has expired. Mr. Gerlach, you're recognized.
Thanks, Mr. Chairman. Commissioner Considine, you've had a couple questions from some of our members of the committee today about your August 23rd letter to Secretary Sebelius and whether realistically you've given her enough time to respond to your questions. But I understand also you might have all had prior meetings with HHS on a number of issues that you still continue to question. Is that accurate? And if so, what was the outcome of that meeting or meetings?
I appreciate the question, Representative, and the opportunity to clarify. You know, the questions that we have in the letter are questions that we've been asking for months now as part of our meetings with CSIO and HHS that we do have. And they are very accommodating in meeting with us and sitting down with us. But what we haven't gotten to date are answers and guidance and the clarity that we need on these questions. So really the letter is a formalization of the process that we've been going through for months now. And you know, we are nearing the end of sort of the timeline we've been given. We have until November 16th really to make a decision as to what the state's going to do. So we need these answers.
Okay. Also understand there's a July 23rd, 2012 letter to Catherine Sebelius from the Republican Governor's Policy Committee asking a whole slew of questions very similar to the questions you've raised in your August 23rd letter. And since Governor Corbett of Pennsylvania is a member of that policy, or a member of the Governor's Association, do you know whether or not he has received any responses to that letter or to the questions raised in that letter?
To my knowledge, there was a response to the letter, but not answers to the questions that were raised.
Okay. Ms. Howard, you indicated, I think, on two occasions that really the lack of progress in moving forward with state exchanges is really connected to the political climate in the state and not maybe other things. Are you suggesting that the questions posed by Commissioner Considine or the Republican Governor's Policy Committee, those questions really aren't valid or fundamental as to whether a state ought to move forward in moving or establishing a commission, or excuse me, an exchange?
No, not at all. I think there are important questions to be raised, and this is an iterative process, and I think they're in constant dialogue, as we've heard actually, with CSIO, and I think it's constructive to be asking these questions. I just make the larger point that while some states may be in a holding pattern now because of external forces, external factors, you know, the states that really do want to move are able to move absent the guidance that they're asking for.
Well, somebody that's been in a state legislature in Pennsylvania, before I would be asked to put up a vote on whether or not to move forward with something that commits taxpayer dollars at the state level, I'd want to have answers to the questions of how much it's going to cost the taxpayers of Pennsylvania to have this exchange. Based on your work with the foundation, do you know how much it's going to cost taxpayers in Pennsylvania to have an exchange in the Commonwealth?
No, I don't think we know that yet because it's an evolving. We don't even know what policy decisions and what type of exchange Pennsylvania would choose to have.
Here's a question from one of those posed to the Secretary. What financial costs will the state face if it elects to default on a federally facilitated exchange? Do you have an answer to that question?
No, that's the issue that's pending the final federally facilitated exchange rules.
And another question, if HHS operates an FFE in the state, will the multiple state insurance plans be required to adhere to all applicable Pennsylvania insurance laws? Do you know the answer to that?
I do not.
So how can you expect any state to really put forward a public position on whether to move forward with an exchange if it doesn't know the impact on cost to the taxpayers of that state or to the insurance laws of that state? Isn't it prudent for the state decision makers to have those answers before they make that decision?
Well, I think they're all proceeding prudently in the sense that they're all investigating their options and and making policy decisions. And I do think it's admirable that they put so much effort in. And I know there's a lot of people working hard in Harrisburg and Trenton and all these state capitals. But I do go back. While every I may not be dotted, there's been substantial guidance. In fact, we heard, I think, one of the member testify about thousands of pages of guidance. So I think there is a substantial guidance out there.
But if the right questions aren't being answered, you still don't have the information as a decision maker in a state to move forward. So just as you would acknowledge that the August 23rd letter from Commissioner Considine and the July 23rd letter from the Republican Governor's Policy Committee were appropriate to raise with the Secretary of HHS, wouldn't it be prudent for her to respond as soon as possible?
I think so. I do know, having been a government official, that sometimes getting letters out is not always easy, and I do agree that often the phone may be the best way, and I think that hopefully will be one outcome of today.
But answers need to be in writing because there could be litigation down the road, could there not? And so having formal answers in writing from both sides would be a very important part of building the record in making sure the proper decisions are made. Would you agree?
Not always, because again, sometimes on the spectrum of federal options, the federal federal government could be very prescriptive, and they could handcuff the states. And we're seeing that states that want to implement are seizing that flexibility and moving ahead.
If I were in the state, I think I'd want something in writing before I could rely on it from some federal agency. Thank you. You go back.
Good point. Commissioner, I understand you got to catch a train, and so I just want to thank you for being here and for answering our questions so intimately. Thank you again, and you're excused if you desire. Thank you. Mr. McDermott. Doctor, you're recognized.
Thank you, Mr. Chairman. Mr. Chairman, I disagree with the main point of this hearing. If the point is that the administration won't be ready for implementation for the Affordable Care Act, then I'm here to tell you that's wrong. I come from the state of Washington, which is leading the way in moving forward with the Affordable Care Act. My office is in regular contact with all the principal players in Washington State, and they say that all systems are go. The legislature has enacted the authorizing legislation necessary to implement the act. In March of this year, the governor signed into law the second and final piece of exchange legislation. Washington State is one of the first states to receive a Level 2 establishment grant funding to build its exchange. Washington is also one of the first states to select a benchmark health care plan. It's a Blue Shield plan that is currently the most popular small group plan in the state of Washington. The exchange now has an 11-member board of directors, including various operating committees. The exchange also has in place an advisory committee and working groups that focus on consumer protection and plan management, among other things. The exchange has its CAO and staff in place. They've hired the contractors to build the necessary user infrastructure. They're on track to get conditional certification from the administration in January and to start using testing in the spring. The exchange CEO tells me they are projecting to have 300,000 Washingtonians in the exchange in the pool by 2015 in a state with 1 million people without insurance, which spends $1 billion annually on uncompensated care. Getting those people into plans is what I'm most focused on, not on picking fights over perceived faults with the new system. I think if you're looking for excuses for not implementing, you can find them. If you want to implement, you can do it, because the state of Washington is perfect proof that that's going on. And what I hear from the state about the administration is really nothing but praise. They've said that HHS is working with them at every step of the way and giving them all the guidance and support they need. So if my colleagues on the other side of the aisle are here to argue that stakeholders don't have the tools they need to get health reform off the ground, I'm here to tell you I'm not buying it. Mr. Kine is correct. This is a premature hearing because you could have had states out here that are actually up and running. You brought one person who says, I couldn't get him to write down exactly how I should do it. Well, you can always find that kind of stuff, but there are other places where it is in place, working, and Washington State's ready to go. And I think that I just want to say one last thing before I stop here, and that is the chairman said in his opening statement that the administration is implementing the Affordable Care Act, quote, behind closed doors with little or no public input. Now, I would like to submit for the record, and I ask unanimous consent for that, for a record, a list of 34 just exchange-related conferences, meetings, listening sessions, and consultations HHS has held since December 2010. 34 meetings is hardly without public input. This is a process that is working in some states because the political leadership wants it to work, and is not working in certain places because the political leadership thinks that this is how they will use it to defeat President Obama in the election. And there's a very clear break point. It is possible to implement. It is being done. And will there be problems? I am certain we're going to have problems in the 2013 session, that we're going to be in here trying to tinker with this and tinker with that and make things, because you can never design a human system without making mistakes. You cannot anticipate all the problems that you face. But we are on our way in Washington State, and it can be done. And anybody who says it can't simply is unwilling to look at the facts on the ground. In some states, you heard about Oregon from Ms. Howard, and I can give you Washington. These are the states with the lowest health care costs in the country. Medicare costs in the state of Oregon and Washington are the lowest. And we also are implementing our exchanges because we're getting ready to make this thing work. I yield back the balance of my time.
Thank you. The gentleman's time has expired. We don't like the program in Texas either. And there's no taxes in Texas. Dr. Price, you recognize.
Thank you, Mr. Chairman, and I want to thank the witnesses as well. I'm sorry Mr. Considine had to leave. I was pleased to hear, though, from Mr. Kine that nothing's set in stone. Whew! Thank goodness that nothing's set in stone. I thought this was a law that was moving forward, and Mr. Kine also said, look, if anybody's got a better idea, just bring it to us. We're happy to listen to it. Well, the fact of the matter is that during this whole process, there were many of us who felt like we had a better idea. And we appealed to the administration week after week after week to just sit down with us. Just talk with us about these ideas, because we believe that you can solve all of these challenges without putting Washington in charge. And the administration ignored us at every single turn, week after week after week. So there's great skepticism on our side when we hear somebody say, oh, if you got a better idea, we're happy to listen to it. The question I wanted to ask Mr. Considine was who's subject to the penalties if you don't comply with the law? Ms. Howard, who's subject to the penalties if the law is not complied with? Is it the federal government that's subject to the penalties?
Which
is it the federal government?
I don't believe so.
Heck no. It's these folks. It's the folks in the states, the folks trying to comply with this law. And all that we're hearing is that the rules haven't been promulgated in enough time to be able to put things in place, and they're working as hard as they can. Mr. Durham, you have a paragraph in your testimony. Clear regulatory guidance in each of these areas is needed in the very near future. Unless the guidance is forthcoming, it will be difficult for health plans to complete product development, etc. How long does it take usually when the federal government or when there are major changes to rules and regulations that come out, how long does it take the plans to come up with the programs and products to be able to market to the public?
Our plans have told us it typically takes 12 to 18 months to fully develop a product, get it through the state review, and get it to market. So
12 to 18 months, Mr. Chairman. And Mr. Durham, am I correct in saying that the time that the enrollment period begins, that you're required to have something available, is October 1st, 2013? Is that right?
That's correct in the statute. Yes.
So we're bumping up against that right now.
Yes.
So, Mr. Chairman, it's clear that HHS has been delinquent in their responsibilities and what they've been able to do, and these folks are trying just as hard as they can to comply with the law. Mr. Durham, I also want to touch on the whole issue of choices for patients, because as a physician, having cared for patients before, what they want are choices. They want to be able to know who's going to take care of them. They want to be able to know that they're going to be able to pick a plan that has the doctors that they want in that plan to care for themselves and for their family. Do you know if your members are planning on offering state and federal facilitated exchanges in all the states where they have networks?
Well, I don't know that, because it really depends upon getting clear regulatory guidance here before plans can really decide which markets they want to compete in. And so I think that's a critical step in the process here. We have some guidance, as has been discussed today, but there's still guidance missing, and to be able to develop products, get them through the various state review processes, and if they have to be a qualified health plan, there are additional requirements. That'll take time, and I think it depends in terms of plans being able to compete in those markets when they get the final guidance to be able to put together the products that comply. Compliance here is very important, but they want to serve their customers. They want to compete.
But it's possible that the guidelines will come out and make it such that it will be impossible for them to be able to provide products or to individuals out there in certain markets. Is that accurate?
I guess that is possible. We would hope that would not be the case because our plans really do want to compete in these marketplaces.
Absolutely. Mr. Durham, I also want to talk about some of the plans. One requirement for the plans sold in for small group markets in the exchange is that they've got to meet annual deductible limits. And that correct? Isn't that right?
Yes, in the statute, the deductible limits are $2,000 for a single individual and $4,000 for a couple.
Now, my understanding about that is that that will make it extremely difficult or problematic for small business employees to enroll in, for example, a high deductible health savings account or catastrophic plan. That
could be the case. We haven't received the clear guidance there yet. We've expressed in terms of the bulletin on this issue that in order to reach the actuarial value requirements, they ought to allow and count the employer's share to health savings accounts in a high deductible health plan. But clearly, I think the deductible limits in the small group market will be a problem since they're lower than what's offered in today's market, and that'll reduce choice for small businesses.
Reducing choices, that's right. Thank you, Mr. Chairman.
Thank you. Ms. Black, you're recognized.
Thank you, Mr. Chairman. Excuse me, and I want to thank you for allowing me to sit on this committee, although I'm not a member, and appreciate the opportunity to be able to ask questions as well. Very informative panel, and thank you so much for being here today on this very, very important topic as we move forward. Mr. Bloomstein, I have a question for you. I thought you brought up a very interesting question that I've been reading about now more and more in publications, and that is the issue, the matter that was raised by Alder and Cannon. And in particular, does the ACA clearly provide for subsidies if the federal government runs the program? I can hear what was said by Ms. Howard on others who are experts disagreeing with your analysis and their analysis. Who will eventually make this decision? Will this be another court struggle here?
Well, nice to see you, Representative Black. I guess we should say that we're in neighboring congressional districts in Tennessee, and thank you for your service. I'd have to say that, these statements that the IRS, some official at IRS has said that the agency has authority is, that's not a surprise. They issued the regulation. But they're supposed to speak in the regulatory process in a formal way. They're supposed to explain their reasons. The reasons are lacking. They're virtually non-existent, in my opinion. And for someone to say, oh, well, an IRS person said X without saying what the argument is not very satisfying, I must say. In terms of how arguments occur, usually lawyers reason with each other, and I certainly have changed my mind on issues, but I only change my mind in response to arguments, not in response to these, 5 different people said something, disagree with you. I'm sure there's millions of people disagree with me on many things. Until you know what the arguments are, it's hard to confront them. I think the IRS has overreached here. They've not explained their rationale. The rationales that are out there are unsatisfying. They're not satisfactory. The IRS has to establish that there's ambiguity, implicit authority to rule, not just in gross, but on this specific question. They've not established that because the courts have said that these normal ways of construing statutes, the exclusio unius rule, is part of the interpretive process. And so once you say that that's part of the interpretive process of determining whether there's ambiguity, then to me, the IRS really has a problem. And so it's conceded, everyone concedes that there are 2 exchanges. The statute provides subsidies in one exchange. It doesn't provide subsidies in another exchange. And when that happens, basically there can be no subsidies in the other exchange. And so then you have to look for other exceptions to those kinds of rules. And I've not seen any exceptions that really hold in my opinion, are persuasive. So then the question you asked is how will this be determined? And I see 2 different scenarios. If there's a change in the administration in this election, my guess is that the Governor Romney, as president, will very likely have a new set of interpretations in the Internal Revenue Service, and that this rule may be modified or changed in some way, because I think the argument in favor of it is very thin. It's very results oriented. If President Obama is reelected, then I think the rule will stand, and then there will be a legal challenge. You're right, it will be in court. And at first I thought that it would be hard to imagine who would bring this case because it adds benefits to certain people, and that's the good part. But it also adds a tax to some people, namely to these companies, these large companies, and they are paying $2,000 or $3,000 per employee taxes if their provisions don't meet the affordability criteria and the benefits and coverage criteria at the federal government. And so I think states may have the ability to bring this action. They would claim that that they would have a competitive advantage if they choose not to set up an exchange. So I think you're going to find some kind of injury in recruiting of companies. And certainly the companies themselves will have standing the ability to challenge it. So I think you're going to see a coalition, and coalitions are actually in the process of being formed, I'm told, where states and arguably private employers of 50 or more employees will bring this action and challenge the IRS ruling.
Well, I think you have certainly laid this all out very well. I am not an attorney, I'm a nurse, and so reading your statement, it flowed very well so that I did understand it. But what it did make me think of is just one more complexity in what is already a very complicated program, one that we don't have a lot of definition. And frankly, I'm just hearing it from my employers and hearing it from folks back in my state, whether they're employers or they're government officials or whatever, that there's so much uncertainty and confusion, and it's very, very hard to make a decision when there's not clarity. And just to end here, we come from a state where we tried to have a single-payer system, where we tried to have a universal care. It was very difficult and didn't work in our state of Tennessee, and I know you were involved with our good governor in trying to fix the program, which ultimately just really unraveled, and we no longer have the program. So
yes, Governor Bredesen is a hero for trying, and I must say he's in Tennessee, as you know, they're Tennessee Democrats, and he's a Tennessee Democrat, and I'm proud to work for him and support him.
Well, I served under the good governor, and I know what difficulty we had there with the program, and now that it's gone, I'm looking at what may be a mirror of what we tried and didn't work. So thank you so much for your testimony and coming here today.
Thank you.
Thank you. The lady's time's expired. I want to thank the witnesses for their thoughtful testimony and insights into the status of health insurance exchanges. The Obama administration repeated avoidance of a transparent regulatory process and ongoing delays may be politically expedient, but it's not without substantial cost. How do we account for the cost of unemployed Americans losing job opportunities because businesses are not hiring workers while the full compensation costs are unknown? Can you put a price on the family forced to forego health care coverage because they have been priced out of the market by costly regulations? The more Americans learn about the law, the less they like it. Despite years of assertions to the contrary, information is the most significant threat to Obamacare. Holding back necessary regulation to avoid public scrutiny is irresponsible. Americans deserve better from their government. As a reminder, any member wishing to submit a question for the record will have 14 days to do so. If any questions are submitted, I ask the witnesses respond in a timely manner. With that, the committee stands adjourned. I thank you all for being here today.
Thank you, Mr. Chairman.
Thank you, sir. He, Lord, he, you know.